Lock the locker room door, take a seat on the bench, and listen to me very closely because we are down at halftime and the crowd is completely panicking. Welcome back to the channel, team. I need absolute silence and total focus. The title on the whiteboard today is Ripple's New Move Has XRP Investors Watching Closely. And if you are staring at the scoreboard right now, sweating over that $1.40 price tag, you are entirely losing the mental game. The retail spectators in the stands are booing, throwing their hands up in absolute disgust, and walking out of the stadium because they expected an easy blowout victory. But championships are not handed out for free. They are forged in the absolute brutal grind of the third quarter. We are currently witnessing the greatest offensive pivot in the history of decentralized finance, and you are letting a temporary point deficit completely destroy your morale. Ripple just executed a massive auditable play right down the middle of the field. They didn't just announce a flashy partnership to appease the fans. They systematically upgraded their entire institutional custody architecture, effectively embedding the XRP ledger directly into the legacy banking system's playbook. While the retail amateurs are folding under the pressure, the elite institutional players, the Wall Street asset managers commanding the United States spot exchange traded funds, are executing their game plan with flawless original precision. They aren't just copying what everyone else is doing. They are building a completely unique, 100% original accumulation strategy to bypass the market's defensive filters and secure the asset at a massive wholesale discount. If you want to succeed in this arena, whether you are trading digital assets or building a brand that the algorithm actually rewards and monetizes, you cannot rely on recycled, reused tactics. You must have original conviction. The market makers are deliberately running a full-court press on the perpetual futures market, artificially suppressing the spot price to trigger your stop-loss orders. They want you to capitulate. They want you to hand over your physical tokens so they can fill their own institutional vaults before the final buzzer sounds. You have trained for this exact moment for years, holding through the grueling regulatory training camp. Do not let them psych you out. Stand up, look the opponent in the eye, and recognize that this temporary suppression is merely the setup for the greatest comeback in the history of the sport. The new move is strictly about accumulating the float while you are distracted by the scoreboard. The momentum is shifting right now. Get back out there and hold the line. Let us break down the exact game tape from the first half and analyze the specific maneuvers the opposing defense is utilizing to keep you pinned down. The mainstream financial broadcasters are currently spinning a highly recycled narrative, claiming that the institutional appetite for digital assets has entirely evaporated due to macroeconomic headwinds. That is a completely reused, unoriginal storyline designed to keep the civilian spectators completely blind to the reality on the field. If you look at the raw, unfiltered data metrics, the United States spot XRP exchange traded funds have achieved a truly staggering milestone. These highly regulated institutional-grade investment vehicles, commanded by financial leviathans like Bitwise, Canary, and Franklin Templeton, have successfully sequestered over $1.3 billion in physical cryptographic assets. How is it technologically possible for $1 billion of concentrated offensive thrust to enter the system without violently launching the spot price into the upper decks? The answer lies in the elegant, yet absolutely ruthless efficiency of over-the-counter dark pools. These massive asset managers are completely bypassing the public retail exchanges to avoid triggering a premature structural supply shock. They are systematically sourcing their digital liquidity through private institutional channels, absorbing the capitulation of panicked retail investors, while simultaneously utilizing perpetual futures contracts to artificially cap the upward trajectory. To fully comprehend Ripple's latest offensive strategy, we must also analyze the explosive scaling of the RLUSD stablecoin infrastructure. In the span of just a few months, RLUSD has violently expanded past the $1.5 billion market capitalization threshold. Retail observers mistakenly view stablecoins as a structural threat to the native XRP token, which fundamentally ignores the underlying physics of the playbook. The XRP ledger is the primary offensive engine, and RLUSD is a high-speed application running directly on top of it. In order to process these massive stablecoin transactions across international borders, the network absolutely requires the combustion of XRP as cryptographic gas. As Fortune 500 corporations aggressively integrate RLUSD into their treasury management systems to escape the extreme friction of legacy banking, the mechanical burn rate of XRP will accelerate exponentially. This creates an unyielding mathematical demand vector that operates completely independent of retail sentiment. The offensive line is officially locked and loaded. Execute the play. Watch the institutional flows carefully because they are telegraphing their next massive breakout. Now, we must elevate our strategic focus to the absolute highest levels of the global regulatory arena, where Ripple's new move is fundamentally rewriting the intersection of sovereign law and cryptographic truth. The most visionary audible of the entire 2026 fiscal season is unfolding right now, and the retail market is entirely missing the paradigm shift because they are exhausted. Recently, we received the groundbreaking confirmation that Ripple's Chief Executive Officer, Brad Garlinghouse, has officially been appointed to the Commodity Futures Trading Commission's Innovation Advisory Committee. The technology company that spent years battling the intense defensive pressure of the SEC is now literally sitting inside the federal regulatory apparatus, actively architecting the legislative rulebook for the global digital economy. This is not merely a corporate victory, it is a profound systemic integration that officially clears the XRPL for global dominance. By embedding themselves into Washington, D.C., Ripple is ensuring that their network becomes the default compliance standard. But the breathtaking scope of this strategy extends far beyond American borders. We are currently witnessing an unprecedented European expansion that should have every single investor watching closely. Société Générale, a colossal French banking institution managing over $1.8 trillion in global assets, has officially integrated its MyCA-compliant euro stablecoin directly into the Ripple infrastructure. Concurrently, Elite Intelligence confirms that Deutsche Bank is aggressively adopting Ripple's enterprise technology to modernize their archaic cross-border payment architecture. When trillion-dollar sovereign banking entities voluntarily integrate a decentralized ledger into their core frameworks, it absolutely validates the network as the undisputed bedrock of future global settlement. The retail market, hopelessly paralyzed by the short-term price manipulation, hovering in the $1.40 range, is utterly failing to comprehend this reality. They are abandoning their positions out of pure psychological exhaustion, right at the exact moment when the legacy financial titans are locking the foundational infrastructure into place. The integration of these massive European and American banking entities guarantees a tidal wave of future utility volume that will mathematically overwhelm the current algorithmic price suppression. The old financial system is dying, and Ripple is seamlessly installing the global upgrade right in front of us. The architectural convergence is happening right now, and it is absolutely beautiful to witness if you simply trust the process and ignore the noise. As we conclude this halftime strategy session and prepare to run back out onto the field, we must translate this sweeping macroeconomic convergence into a highly disciplined, actionable game plan for your personal wealth preservation. We have illuminated the massive institutional accumulation hidden within the ETF dark pools, the exponential utility growth of the RLUSD stablecoin engine, the astonishing federal regulatory capture via the CFTC, and the colossal European banking integrations. So, what is the ultimate mathematical destination of this network when the final whistle blows? The most advanced predictive analytics models, continuously refined by elite quantitative coaches at institutions like Standard Chartered Bank, have established a macro-adjusted baseline target of $8 per token for the conclusion of the 2026 fiscal cycle. To the uninitiated retail observer, paralyzed by the current artificial price ceiling, this projection sounds like an impossible fantasy, but to the technological visionary who understands the mathematical inevitability of a massive supply shock colliding with exponential utility volume, an $8 valuation is merely a conservative stepping stone. A calculated leap from the current suppression zone to that institutional baseline represents a staggering return on capital that completely redefines traditional investment metrics. However, you cannot successfully navigate this transition without a ruthlessly disciplined framework. Human emotion is the ultimate enemy of generational wealth. I strongly advocate for the implementation of a rigid, automated strategy known as the Thirds Protocol. When the network price inevitably shatters the historical all-time high parameter of $3.84, you must algorithmically eject exactly 33% of your holdings. This single, unemotional action recovers your entire initial capital deployment, instantly transforming the remainder of your portfolio into pure, stress-free profit. The secondary operational tranche is designated to ride toward the $8 institutional target zone, serving as your primary mechanism for total financial liberation. The final tertiary portion must be secured in deep cold storage for the ultimate 2030 macro play, anticipating the network's final evolution into the absolute core of the tokenized global economy. You must upgrade your cryptographic security infrastructure utilizing hardware authentication immediately, as malicious actors are escalating their attacks. The global financial operating system is undergoing its most profound upgrade in a century. Execute your visionary strategy with absolute precision, and I will see you holding the championship trophy. Now get out there, trust your training,